Hi everyone, welcome to the fourth month update for the $5,000 small account challenge. This is the May 2026 update. So the first thing I will say is that the account is now above 10% return. The current net P&L is $737.46. This is the trading activity list here for May. And so you can see all the trades and when they were taken. You'll see that they were primarily micro gold futures trades and then a few uh, micro E-mini US indices trades. And I'll talk a little bit about the trades versus number of strategies a little bit later. But anyway, I want to address something really quick. So both of these pictures are taken from Iron Beam's monthly statement. Now you'll notice in the April video I mentioned that we were back to break even. We're a little bit over 5,000. I'm not sure how Iron Beam calculates the monthly statement because it says here that the USD previous ledger balance was $4,880.37. And that's weird because in my previous video, I showed the statement cut for the month of April. And obviously the USD balance was about 5,000. So I don't know how they're determining when the date is for the previous ledger balance. But I am wanting to stay consistent for these videos, so I'm going to simply say the monthly starting balance based on that USD previous ledger balance. Technically, that's incorrect. Yeah, it was around 5,000. It was not 4,880. But what matters is not how much necessarily did we gain in the month, but where is the account overall? And that's that net P&L at the top left here. So our end of May balance is $5,737.46 on a $5,000 starting balance. So we're at 14.75% return for the year, and that is what matters. As for the portfolio breakdown, there are still only two instruments, primarily 11 US indices strategies and 3 micro gold strategies. So I want to talk a little bit about portfolio construction here, just briefly. So it looks like I'm heavily overweighted on US indices and not as weighted on gold. But let's go back really quick to the trades taken. Look at the bottom left here, the offset activity. You can see that even though I only have 3 micro gold strategies on, there were far more micro gold trades that were taken on the in May. Now, I know it says June 26th. That's the contract. That's the front month. But the far right is you can see in the trading activity when those actual trade dates were. So if we look at the bottom left again in the offset activity, you'll see that it was primarily gold trades and just a few US indices trades. So just to touch on that, the 11 US indices strategies I have are, you can think of them as 11 individual edges that I know of that are intraday only that I'm running on US indices. That doesn't necessarily mean that we're going to have more US indices trades than micro gold. So even though I've only got 3 micro gold edges that are active in this portfolio, it just so happened that in the month of May, those edges were finding entry signals more frequently versus my US indices strategies. So when it comes to portfolio creation, this is not the metric that you care about. It's not how many US indices strategies do I have versus how many like gold strategies do I have. Um, it's more about how frequently are they trading? What's the correlation between them? And historically, would I have been more overweighted in one set of instruments than another? And is that a bad thing? So it's not specifically just the number of strategies you have, it's how frequently you are in the market for a particular instrument. So I just want to kind of explain that disparity for those who are still trying to learn portfolio construction and still kind of wanting a way to think about it. Obviously, it's a deep topic and not something I'm going to really dive into in this video, but I just wanted to touch on that. As for the plan for June, no portfolio changes, still running the 11 MES, 3 MGC. And I did mention in my April video that if the account reached 6,000, so that'd be a 20% gain, then I will feel comfortable adding another instrument, possibly a energy instrument like micro crude oil futures, or a currency like the micro British pound. And the main reason why I'm waiting is because there is always the chance that this portfolio will find a strategy signal, like so it'll find a trade in US indices, and on that same day, a signal for gold will fire and it will enter a position in gold. So on a $5,000, roughly $5,000 small account, and the margin requirements, if I was to add a third instrument in here, I'm running very close to the the amount of margin that this small account can handle, and it's very likely that the broker would call me and say, "We've liquidated all your positions. You've hit your margin limit. This is a margin call." So that is why I'm waiting for 6,000 before I add another instrument, because I'm conservatively considering what is the worst case scenario if this portfolio was to find a trade in every instrument that is currently in the portfolio. So right now I'm fine with 2 at 5,000, but I want to see the portfolio reach at least 6,000 before I add a third instrument. But yeah, we'll see what happens in June, see if we get there. But otherwise, no changes. So thanks for watching. Stay tuned, and hopefully we'll have some good results by the end of the year.